Good afternoon, good morning, and good evening, everyone from different parts of the world. My name is Badrinath. Welcome to the webinar focusing on rare earth and rare earth industry aspects and geopolitical aspects and geo-economical perspectives. On behalf of rare earth industry, I would like to give a short overview of who we are and why we are doing this and what we are going to do and how we are placed in the industry. Global Rare Earth Industry Association, REIA, it's an association on a global level, which is been established in 2019. We have a purpose because we know rare earths exist in every product, where whatever we name it as, and their functionality and the functional materials, their efficiency characteristics are very pleasing and very effective, which makes us to be utilizing them in different products, and their criticality and the sustainability perspectives are also important, which shouldn't be neglected. So looking at these things, the advantageous side, and we also need to know that the rare earths value chain are also having some challenges. And the first and foremost primary challenges that this industry is facing is actually lack of transparency. We don't know how this birth and death of these materials are happening, and the market volatility, prices goes down beyond the expectations, and also goes up actually to an extent where it cannot be affordable, or else it gives us a big shock towards the downstream entities. And that gives us actually to have no standards actually when there is lack of transparency and volatility. There is no standards. Luckily, there is one which is going on. That's a very good sign. That is TC298, focusing on different perspectives and different streams bringing in. And when there are no standards, legislation becomes actually very weak, and which ultimately hampers the sustainability and innovation perspectives. So it's very important that actually the transparency brings in a lot of aspects addressing the sustainability, addressing the volatility and innovation perspectives. So where it is the industry today is actually today the definitions and quantification methodologies are very ambiguous, and they don't have any framework. And collection of data is also one of the important aspects, how it has to be collected and in what way it has to be reported and how it has to be modeled is also very important, because you can see the right hand side, all the inconclusive reporting structures are happening, and reporting is happening across the industry, which doesn't give proper conclusions, giving a very wide range of inconclusive aspects. And it is also important when the reporting has to be happened, the data security and manipulation should also be secured. And collaboration and consensus is one of the most important thing, where the gap between the upstream and downstream players should establish in such a way that addressing the right aspects, instead of just focusing on the cost perspectives, which lead to a long gap between the upstream and the downstream. So looking at all these things, industry's focus is led towards the sustainability and transparency, which will lay a foundation towards a healthy rare earth industry. And all these perspectives brings in one aspects, why we exist. And we, as a global association with a focus to promote a competitive and sustainable industry, sustainability is one of the most important perspective, not only in the use phase, but also in the production phase of these materials. And we have the members not only from one specific region, we are also having people actually from different parts of the geographical location, coming from all parts of the continents. REIA aims to develop a strong, balanced global stakeholder network. That means we want to cover the entire value chain, covering the downstream players and the upstream players and the midstream players. That supports the development of sustainable value chains. And we would like to develop actually the transparency and certification aspects of the products and processes that will allow us to have an integrated value chain transparency and sustainability assessment through the certification aspects, and also bring in the consensus actually in relation towards the standardization perspectives, and also create a scientific platform that allows all the stakeholders as well as the research society along with the industrial society working together. So coming back with all these things, how we are able to build the transparency and sustainability for these value chains is actually bringing in the glossary, which we don't have today, how it has to be made, and this unified glossary with the consensus of the industrial players along the value chain, and bringing in the standards and guidelines with all the work instructions, manuals, and procedures without having any discrepancies and gaps between the industrial players along the value chain. And then, as I mentioned, when the reporting structure has to be proper, we also need to have a data and security protocols, which allows us actually to share the data between the nodes. And so this allows us to have the transparency and a weighted and a quantified sustainability assessment that you can benchmark, and you can make sure that actually I am sustainable or we are sustainable within the industry. That allows us to have the traceability, allowing the closed loop systems very effectively, so that the secondary resources will be much more effective into the streamlined processes. So thus, by actually, I would like to stop here actually where the journey starts to build a sustainable rare earth industry. And I would like to welcome you all, and I hope you all enjoy the lineup of the speakers. We have very wide range and with a very wide scope of knowledge they have within the industry. And hope you will be enjoying, and you can ask the questions as the session moves on. And I will leave the stage to the speakers. Thank you very much once again, and welcome to the webinar.
Thank you, Badri. And as I communicated and CC, we have 4 speakers now. And the first speaker is Lloyd from Arafura Resources, which is developing a rare earth project, well-advanced rare earth project in Australia. So, Lloyd, welcome to the floor, and floor is yours.
Thank you, Badri and Nabil, for the opportunity to speak today and present. So today the topic is around our view on the NdPr market and the outlook and the opportunity for various rare earth projects such as Arafura's Nolans project. So I've got usual disclaimer. And then so for about this 20 minutes, I'm sort of going to cover the project itself and then go more into the NdPr market situation, the outlook and the opportunity, and then also into probably the stages of the development of where we are with our offtake and funding and our next steps. So it's just about the Nolans project highlights. So the Nolans project is a globally significant project. It's located in Australia. It's an advanced NdPr project. You know, we consider ourselves a tier 1 project and an alternative to China. It's a sustainable, we plan to be a sustainable producer and a sustainable transparent NdPr supply source. So obviously there's greater emphasis that's going to be placed on sustainable sourcing from our end users, and suppliers will be looking to for producers to conform to social and environmental standards. So, you know, we'll be one of these projects or a producer that will have greater transparency and visibility on our operating practices. It's a long life strategic resource with a project life of 39 years. It's sort of low resource risk, extensive drilling. We've done all our environmental regulatory approvals are all completed and all our permits are secured. And we're sort of moving more towards now like a sustainability review against international standards and looking more into mine certification. We've completed our feasibility study, including a fully costed permanent disposal facility. And our work stream is really based around our advancing our engineering towards project execution and construction phase. And the other work streams is on offtake, NdPr offtake, and project funding. So to the left, just as a refresher, the project is in the Northern Territory of Australia. It's just north of Alice Springs, and it's surrounded by very good infrastructure. We've got a good gas pipeline. We've got a rail line for bringing in reagents and sending out our product. A good highway, and we've also got access to workforce that can reside in Alice Springs. So just moving along to this slide, it's about all our milestones, and it says Nolans NdPr shovel ready. So it's what that really means is that the project's already gone through the planning approval process, and we can initiate construction, you know, upon securing our funding. So that's really what that means. We can see here that if I go through these steps, we've under a bilateral assessment between the Northern Territory government and the federal government, we have approvals both with the EPA and the federal government. We've completed our DFS and all of our piloting from ore to oxides. Within our team, we've got a group, an engineering group that's supporting our internal employees for project execution, and we're sort of working towards this pre-construction engineering, or what we call detailed design. We've updated our life of mine. We had a 54% increase on our ore reserve, and our life of mine schedule has been increased to 39 years. We also have an Indigenous engagement strategy in place, and we executed this native title agreement with the traditional landowners, and it's really an agreement that outlines the use and management of the land. All of our mineral leases have been granted by the Northern Territory government for 25 years. That's for mine, processing, infrastructure, and more recently on the water. It just gives us the right to mine and develop the project. We've got federal major project status, so that just acknowledging that it's a strategic asset. We've done some customer verification with all of our finished products, including our NdPr, and all of our effort is still around now progressing our offtake arrangements with various parties and how we're going to fund the project. So the next area I just want to look like just talk about is really the NdPr opportunity, and obviously it's a very strong outlook at the moment for magnets and demand for NdPr. You know, we're probably going to see some supply risks and shortages in the market. There's also positive momentum in the market, and it's not just about the rare earth market or the industry. I mean, I think industry is recognizing there's a shift, and capital markets also are noticing what's happening in the space. So there's a lot of funds for projects right now. And so there's a lot of interest for NdPr, and it remains high with offtake partners, financiers, and the government. Obviously, we all know about what's happening in the green economy and the money towards renewables and e-mobility, shifting policies around the geopolitical tensions. You know, we've got industries obviously seeking supply chain diversification and security, oversupply, and then also sustainable sourcing and traceability. So that's started to play a big role, particularly for end users in renewable and e-mobility. And just recently, we've had Irma in the context of Europe looking to rebuild and invest in value chains. So this is, you know, it's a very good environment at the moment, sort of creating a good window of opportunity to develop and to get advanced projects off the ground. And just to the left here, you know, we're looking to have all of our operations all at a single site to produce NdPr and some other rare earths. Ore to oxide, we're probably one of the only sites, one of the only companies or projects that are looking at a single site. And it also allows then for the product traceability and waste management certainty. So I'm just going to move on to the market, and I've just got this slide up regarding rare earth permanent magnet market, and it's really just going back over the last sort of 6 months. You know, the stats are really showing some really good export stats, you know, into the various regions. I've got here Germany, the US, and South Korea. US is quite strong, but including Thailand and Vietnam is very strong in terms of importation of finished sintered magnets. It's mostly going into the electronics market. So we've seen, you know, since probably around June, demand growing for multiple segments. You know, we've got here a CAGR globally of around sort of 7%, maybe China doing 10%. You know, other agencies, they're probably reporting sort of different numbers. So there's strong demand internally within China, and also the export market is very good. We've seen good new energy vehicle growth in China and Europe. We've seen good car registrations for battery electrical vehicles in Germany and also the UK. And the green transition, or this government stimulus, sort of helping things along. So this growing sort of demand for magnets since sort of July sort of aligns well with the high demand and prices for NdPr. And of course, all these magnets still rely heavily on rare earth imports and illegal source of supply to meet demand. So I'm going to move on to our sort of view on the NdPr outlook, and we've got an NdPr supply demand sort of stack chart here for demand and supply. You know, we look at a lot of agencies that put this together, like the Roskills and the CRUs and Adamas that are out there. This is sort of their view, and we've got our own internal models as well. You know, we overall demand's looking pretty good. You know, over this next 10 years, there's some good forward growth in multiple segments, including the automotive, wind and electronics, and industrial applications. So I think growth will be across lots of different sectors. I mean, EV investment plans, I won't go into too much about what's happening in that space. I mean, we all know there's a lot of investment plans across Europe and in Korea and even the US. So a global adoption of new energy vehicles is going to be strong over this next decade. And offshore wind is also accelerating. We're seeing strong growth in new projects. You know, offshore wind, I think, is now broken about 30 gigawatts have installed. It had a very good year in 2019. I think 2020 was a little bit lower. But there's new projects, not just in Europe, but also US is looking good under the Biden administration. And we're seeing also bigger units of 10 to 12 megawatt units for the offshore wind turbines. So in the supply, obviously, China's still the biggest market. I mean, this China production that I have here on the stacked chart, I mean, that also includes the more recent quota increase by MIT. And of course, there's still always some China or undocumented China source of supply. Lynas is operating and doing quite well, but also have a few challenges ahead as they move their facilities back to Western Australia. MP Materials is producing a concentrate, but also feeding the value chain of China. A lot of small producers happening. There's some that's really around Russia and what's happening in India. And then there's also, you know, product coming from recycling byproducts, mostly mineral sands, which will surely continue to develop. So there's more product that really needs to come to the market. And, you know, we expect obviously that China may continue to expand, but, you know, China will always continue to encourage the importation of NdPr to support its own downstream industry. You know, we expect that overall we'll see a lot more projects will be required, and that there will be a shortage and a supply gap in the future. With all the supply reforms and industry consolidation, you know, that's happening in China, you know, they're not going to be able to rapidly expand supply. So, and then we have export policies also may look to restrict supply. So I think there's a good opportunity for new projects over this next decade, and there needs to be investment in new projects to meet this demand. So the next two slides are on our offtake and our supply chain model, and the next one's also on our funding and obviously, you know, the window of opportunity for advanced projects. So, you know, we're looking to be a sustainable producer, and we want to align ourselves with end users that are interested in a green procurement strategy. You know, we want to align ourselves with with sales to end users that are not aligned with the Made in China 2025 strategy. Because we're planning to produce a finished product, unlike probably a lot of other projects that may be only making concentrates or mixed rare earth products. There's not a lot of opportunity but to import into China or sell to China. So I think that, you know, our strategy is very clear about that. We want to look at supply to end-use markets, whether they be in Europe, Japan, or Korea. At the moment, we've got advanced offtake discussions with various parties in Europe and in Japan and Korea, mostly in automotive, the OEMs, and also the wind turbine markets. So don't have enough time to sort of go through things in greater detail, but the offtake, we've got an offtake model that we propose where we've got we're using or utilizing a partner for toll processing a metal. So we're looking to actually supply NdPr metal to end users to make it so we can have a supply chain that's partly outside of China. And the idea for us is to actually direct that NdPr metal to the preferred magnet producer or manufacturer of our end user, and that's the model that we are working on. And around this model, essentially we also have a traceability and a supply chain solution so that we can trace back where the origin comes from for the NdPr back to the mine site. So essentially, we've got a tolling partner. We've got an MOU with this tolling partner, currently already supplying into the Japanese market and being utilised for the Japanese market. And it's a partner that we want to take forward with us as we develop the project and then get into production. And then that metal then supplied to end users, and the sale is between ourselves and the end user. All right, so I'll move along to the next slide. So all of our activities are around our construction and project delivery strategy. We're looking to obviously want to move into this final detailed engineering that would lead into construction phase. So there's no more development, there's no more DFS, we're not likely to do more exploration. And all the efforts at the moment are around our offtake and funding. Around the funding, usually we would present a lot more slides, but our funding strategy is around a debt-led funding strategy that involves export credit agencies. So this project closely aligns with ECA mandates that are interested to secure supply and for critical raw materials, and particularly rare earths. So we're looking at export credit agencies within Europe, in France or Germany, but also in Korea and Japan, and linking that to the offtake arrangement, and obtaining these untied loan guarantees. With that, it's not just also about debt, but we can also look to then to go to the market for equity with the balance. Arafura is also seeking Australian government support through ECA funding from two sources called EFA and NAIF. If you're not aware of this, EFA is the Australian Government Export Agency. It's called and has a mandate to provide financial support to critical material projects. NAIF is the Northern Australian Infrastructure Fund. It provides loans to help infrastructure in the Northern Australia, but including critical materials projects. It's a $5 billion Australian dollar facility that will support projects. And right now, that in conjunction with advisors, AUR is accelerating our engagement for project funding with EFA and NAIF. So the funding timeline is obviously critical to meet the current sort of market opportunity. So, there's a lot of effort being placed on funding and offtake. And we've really got, there's a window of opportunity to enable future supply. And the industry, also needs to take action to seize the opportunity. So, there is a limited number of good projects, and we really do need industry and also government to step up and not wait until there's a crisis upon us. Now, the last time there was a major strategic project, that's entered the market was with Linus, and that was back, I think they got all their funding in 2019 and started in 2013. So it's definitely time now to act, and Arafura is a good opportunity for a strategic solution for the market. So thank you for your time. If you need any more questions or any further information, you can always email us or contact us. Thank you.
Thank you, Lloyd. A very brief and nice presentation and update on the Arafura's Nolans project. And is there any question actually for participants? Either you can type your questions in the message panel, or you can also directly ask. So I'm going to unmute all of your mic. If anyone has, you can also raise your hand in advance if you want to raise a question, and you can directly ask the question.
Hi, Lloyd. Lloyd, thank you very much for the interesting presentation, and also interesting your marketing strategy, something like toll processing. May I ask, how will you find the price? Let's say NdPr metal. Yeah, you said you have a partner and you will produce NdPr metal. What will be the price?
Well, right now, I think if you look at whether you want to look at NdP oxide or NdPr metal, based under the current spot market or the benchmark that's been used, it's either Asian metals or some other. You can go to several others. And I guess where you look at the market right now, the prices are pretty strong. I mean, they've gone past the incentive prices for projects to get off the ground. So we think we don't need to have these very high prices, but certainly it's way past that. And I think right now we're in a good position to have these offtake arrangements in place. When it comes to metal for us, we're going to produce oxide at our site, but then have a tolling arrangement to produce NdPr metal. So we'll be paying a tolling fee to that partner, and then we'll be looking at selling metal, because end users at the moment are interested in metal, NdPr metal. They buy magnets. The NdPr metal's closer. So I think it's not that difficult to work it through along the value chain, if that's what we want to call it, to work out. And there's pricing mechanisms that we have in place. So to me, it's not a difficult task.
If I may kindly elaborate, if anyone goes now into magnets, he will have to be competitive with the market dominant player, which happens to be China. That means he will have to have prices from you that are competitive with the prices Chinese magnet makers get from their suppliers. Is this what you're targeting?
When you look at I guess it depends, Thomas, what your view is of forecast prices and where prices today. But prices were quite low.
But prices are always relative, you see. So what I'm getting at is you have to consider that inside China, the prices for rare earth metals and rare earth oxides are 13% lower than the export prices. And that means if anyone wants to do an NdFeB manufacturer outside China, he will have to have similar input prices, preferably lower.
For us, the exclusion of that is being considered, because if you look at the model, we have to, if we're going to use preferred suppliers of most end users, which is, to be honest, there's still tier 1 Chinese magnet companies the product still will need to go in, and it's a VAT excluded price.
Clear. Okay.
The only way you can now not be around that is if you have a complete chain outside of China, but it's not our responsibility as a feedstock supplier to look at the complete supply chain. We're always happy to work with other people, to other organisations, to look at a complete chain, but we also have to be realistic, and we're here actually to have it be an alternative supplier of NdPr. So we see the risk is on the feedstock. It's having that chain of custody. That's where we're coming from.
Yeah, Lloyd, we also have a couple of questions in the in the message panel. Thank you, Thomas, for your interesting questions. We will continue this, after the sessions. And one question from Peter, from the urban mining is, what is your planned production ramp once you secure funding?
Okay, it's one thing I didn't mention, I think, in the whole project, was around our production. So our nameplate full production is approximately 4,400 tonnes of NdP oxide. I also didn't explain when we would plan to be or propose to be in production, and that would be early 2024. That's dependent on our funding and on our offtake and funding. And there is a ramp up period. So, from 2024, there's still 2 years of ramp up.
And okay, Lloyd, there is an interesting question. What is Arafura's operating cost per kg of oxide?
All right. So I think for a long time we haven't really been making the announcing our costs on a per kilo of TREO, because the project is about NdPr, so we always use the measure of US dollars per kilogram of NdPr. So our DFS results, which are out there, we're at approximately $24 per kilo of NdPr, but that's net of our phosphoric acid product that we produce. So we're not just producing NdPr oxide, we have a couple of other rare earths, but we also have produced a byproduct, phos acid.
Yeah, that's pretty interesting and comparable to what is China price is, what Thomas is saying.
It's comparable, and the operating cost, but we have to remember, when it comes to the funding, we also need to have a price that also covers the debt financing. So we do have a competitive operating cost versus China, and China's costs are going up. So that's how we see it, and we see that in the future that we're not going to see very low prices, not given the strong demand in the future and the the rare earth policy that's occurring right now.
Yeah, and a final question, and can you provide some numbers to help the audience to understand the tolling mechanism? Tolling, I don't exactly not sure what does it mean, but what are downstream firms expected to commit if they are opting for a transparent source? Yeah.
Okay. Look, I think if we were to talk more interestingly about the pricing side of things, the mechanism, I think that's really confidential. I'm not sure if I really can share all that. But this company, there's a couple of facilities that are in Vietnam and Thailand. They're already supplying into the Japanese market for metal conversion. They're very competitive in terms of price. It's the same type of process, the molten electrolysis process, and the quality is very good. So we know that. And we just see it as a very good competitive option. We would like to see other options available in Europe or elsewhere that we could utilize, but right now I think these are suitable solutions for what we're trying to do for our end users.
Yeah, Lloyd, can you also switch on your video, because people cannot see your face when you're talking. And
sorry about that.
And okay, the final question is that the cost you mentioned, that is it include the rehabilitation and waste management?
Yes, it does. Yeah, but so the operating cost is the full operating cost, which would normally be our reagents, power, labour, maintenance, all the operating costs associated with a fully maintained residue facility. It just doesn't include things like royalties, and as I said to you, the cost of debt, that component, that's not on there.
Okay, we are pretty on time, Lloyd. If you have given your contact details at the end of the presentation, so if people have from the investment community or the policy circles, if any of them have any questions, they can follow up with you, or they can contact me, and then I will connect you with. Yep. Yes, and thank you all for your questions.
A greater update on our project if that's required. Yep. by anyone. Yeah.
Yeah. Okay. Thank you so much. Yeah.
Okay. Thank you.
We're going to have the next presenter is Thomas Krummer, a very well-known and expert on the rare earth, especially on Asian side. He is based in Singapore. He's heading the global ginger trade and investment consulting company in Singapore. And I'm sure most of you know him, or you are subscribed to his weekly newsletter that provide a lot of information on rare earth market, especially on China. So I welcome Thomas. And Thomas, please go ahead.
I try to look at it a little bit from an investor's point of view, with a little bit down to earth approach. I will throw a lot of data to you, and since the time is limited, I'll have to rush through the screens. If you want the presentation later, please send me an email. So in terms of investment, we like to stick to the Book of Han 2000 years ago, seek truth from fact. What I'm going to present is a little bit controversial system, how China manages its foreign trade, and that also applies to rare earths. It was not designed to be a trade manipulation tool when it was incepted. It was meant to discourage the mindless export of valuable resources that can be better used inland for adding value. So it is this is no harsh criticism. The fact that everybody is aware of is that China dominates the world of finished rare earth oxide output. It is the largest market for finished rare earth compounds. It exports about 30% of its output as rare earth oxides. As a result of climate change, of course, we have a lot of investment into alternative technologies, energy generation, and of course, electric vehicles and everything that comes along with it. China also starts importing large quantities of raw material. So what maybe not everyone is aware of is that China's share in the NdFeB market is about 90%, slightly below that. Yeah. There is, for a junior rare earth miner today, there are actually only two markets to go with the finished products. One is China, and the other one is Japan, which is a distant second in NdFeB. So China is also the default destination for any junior rare earth miner that may choose to do a low capital production of, say, rare earth concentrate. I am of the opinion that the commercial base for an out of China NdFeB production is very weak. So I will try to explain that. So first of all, how did we get here? This is these quotes from two very knowledgeable people. From the 1980s onwards, most of the rest of the world opted out of the dirty work of rare earth mining and value-added processing, right as China was opting in. China's dominance in the rare earth sector is not a matter of mystery or conspiracy. The situation is a result of confluence of policy decisions, some of them intentional, some of them unintentional in China and in the West. That is a quote by Julie Klinger, who made some exceptional grassroots research in rare earths. Absolutely worth studying. Of course, everybody knows Badrinath. He puts it in a nutshell and says China did not take rare earths from the West handed it to China. So China's situation, very roughly, the policy that was etched in stone in 2016 and will probably now be renewed is to reduce exports in order to generate the added value from rare earths domestically. This reduction of exports is also driven by simply increased domestic consumption of rare earths, and partly also a reduction of output and capacity in terms of cleaning up, because there has been a lot of terrible environmental destruction related to rare earth production. There is what we can all see substantially increased demand for import of rare earth raw materials. I will get to that later. So the question is here, is rare earth an investment case? So let's look first at the price development, and I have here for you the prices pre-2010 crisis. Neodymium, terbium, and dysprosium are up substantially, whereas the others, say like lanthanum and cerium, continuously oversupplied, are substantially down. We now also look at the short-term development, which is of course very exciting because this changes the feasibility studies of a lot of rare earth miners substantially. We can see that from the start in late October, the prices of a lot of product have gone up by almost 100% in average. That is not very healthy. I can tell you, I've been for 30 years in raw materials, and this is something that happens in a market between traders, but end users will not go for this. So I would expect some correction in this. We can see it already happening in the last few days in heavy rare earths. In terms of global rare earth output, here a graph from the Nikkei, it doesn't look as bad as China dominates everything, but of course we have to understand that, for example, the output of the US goes entirely to China, and so is Myanmar, and so is Madagascar. Australia is partly liners. So actually, what is listed under others are probably our Russian friends. So actually, China has the whole cake, except for a small slice. So if we look at rare earth, it's not single element mining. You have several elements. And if you produce the one, you will by default also get the other. So also Arafura have about, I guess, 68% output of cerium and lanthanum, and I would be really interested what they want to do with that. So here we see the pie. It's about, this is the average, it's about 2/3 output of cerium and lanthanum and roughly 1/4 output of the magnetic material. If we come then to the value is quite different. So I estimate that the market this year is about $7.5 billion in value as rare earth oxides, and 94% of that are the NdFeB permanent magnet raw materials. That's neodymium, praseodymium, dysprosium, and terbium. And that is by companies like Arafura and other junior miners are going for that. That is the target. It must be by default. However, we look a little bit at China's rare earth exports, and the target of the 2016 to 2020 plan of the Ministry of Industry and Information Technology in Beijing was to bring down exports by 2020 to 30,000 tons. That didn't work. It was 35,000 tons, but it's one can say it's within the ballpark. Now we can see in 2020 that the quantities were reduced month by month, double-digit below the previous year. This is the impact of Corona. In the West, with lockdowns in the world everywhere, the demand for fuel and gasoline dropped, and also the automotive production dropped. That is related to lanthanum and cerium. You can see, very interestingly, in December, the exports were actually 14% above 2019, but the value of these exports dropped. And you may remember, as I initially presented, prices were rising from late October. So why would the value of an increased quantity drop? Because it's lanthanum and cerium, the overproduced products. That is what we buy from China, and that is the volume of world trade in rare earth. So as an investor, of course, one looks at the big banks, and there Morgan Stanley stood out with a research report of March 1 about NP materials. I cite NP's key product, NdPr, is a critical component of permanent magnets, and so on and so on. And then they gave us growth rates from 47,000 tons NdPr in 2020 to 66,000 tons in 2025. I must say, by my calculation, we are already at 62,000 tons as NdPr, but let me get to that. Actual output was lower, of course. So since they mention NdFeB magnets, we have to look at NdFeB magnets. So here we go. What is an NdFeB magnet? An NdFeB magnet contains roughly 60 to 70% iron as magnetite. Then there is boron and rare earth metal, 30 to 40%. We can lower that down to about 27 to 37% of NdPr, plus some dysprosium and a little bit of terbium. The other rare earth magnets that are never mentioned are samarium cobalt magnets, but please keep it in mind because something regarding that comes up. Our focus remains on NdFeB, of course. So here we come to the applications. As you can see from the top two lines, 50% is vehicles, electric or internal combustion engine vehicles. The growth rate for internal combustion vehicles is negative. That has also to do with Corona, I would suspect. But please keep in mind there are also the other growth areas. One is wind power, that Lloyd mentioned, and inverter air conditioners that no one ever mentions. And I suspect the reason is that also here we have an issue that the market happens only in 2 countries or maybe 3, that is China, Korea, Japan. If we look at the NdFeB world output, I've been converting regarding this with John Ormerod, and whom I would call the Pope of magnets. We estimate there was an output of about 207,000 tons of NdFeB magnets in 2019. That implies a demand of NdPr of 62,000 tons. That is more than was produced. What everyone underestimates is that China already recycles FeB output 2012 to 2019. It doubled from 90,000 tons to 180,000 tons. That's not enough. Up to 2025, they will add another 36%. These are projects that are in the pipeline. This is, of course, slightly more than demand is, and that is a problem. So here we can see Tianjin Research estimates the Chinese capacity should be close to 300,000 tons per year of NdFeB magnets. If this is so, if we look at the 2021 forecast, then we are looking at a utilization rate of 67%. I'm not sure where the break-even point is in NdFeB production, but from other metals, I can tell you If you fall below 70%, you are below break-even. I give you here also the export numbers for permanent magnets of rare earth metals from China, which is basically a little bit higher than 2019 at almost 36,000 tons. In case people say, oh, there are alternative magnets, we can make those. Even there, China is probably the dominant supplier overall. If somebody produces NdPr, say as Morgan Stanley suggests that NP Materials do it, they will of course also have to sell it somewhere. Well, the US is the one market where they will certainly not sell it because NdFeB magnet production got extinct there a long time ago. Actually, in 2009 already, the US did not have a single NdFeB magnet manufacturer. We have even in ferrites, yesterday TDK announced the closure of their facility in the US. It will be relocated to, you will be surprised, China. Okay, how can this happen? In order, we have to try to understand it because how is it that China can be the default? How can it be that China is beating everyone in these products? So I'm looking at the margins, the tariffs, and the value-added tax. First of all, I like to look at the market leaders and to see how good the business actually is. I compare two numbers. The very top line, which is the sales, against the lowest bottom line, which is the net profit. This is research also done by the Chinese company Tianjia. You can see the margins are not really exciting. Of course, 2020, for most of the year, we had extremely low prices. I think the low for NdPr was $37. Correct me, I think that was in May. So, of course, this doesn't look exciting. Yeah, so I expect this to reverse in 2021. We go further and we look at the NdFeB manufacturers' margins, which are in comparison much better. I also expect this to reverse because I said initially that in a situation where prices rise so strongly, it is typically traders who drive the prices up. It is usually not the end users accepting them. So I would expect a margin squeeze between the rare earth oxides and the end users of NdFeB magnets. The NdFeB manufacturers will be squeezed. Also in terms of, please remember, the utilization rate seems to be very low, so they will all try to increase sales. And that usually goes at the expense of margin. So now, here's something that is very hard to read, but for completion's sake, I wanted to put in as much as possible. These are China's tariffs for rare earth oxides and other compounds. So we can see a VAT of 13% applies to all of them. However, when they are being exported, you see the VAT refund upon export, it is 0. Then the general tariff rate you can actually almost completely ignore because everyone who's in the WTO has a right to the most favored nation tariff. Most favored nation tariff rate is 5% for imports of these materials. Now, in terms of the trade war, US imports have an extra duty, if there should be any, of between 7.5% to 27.5%. Apparently, according to the likelihood of these exports of these imports to occur. So if you are a Morgan Stanley and you suggest NP Materials should produce NdPr, they have no market in the US. The main consumer is China, where they would have, we look at other rare earth oxides in red NdPr, where they would have a penalty duty of 27.5%. And that didn't happen yesterday. It was in force already on March 1 when they published their research. I would say this was extremely poor research. So here we have, for completion's sake, also the same tariffs for metals. And you can see it's 5% import duty, which is not, doesn't seem very high, but please remember the very low margins in the NdFeB production and also in the rare earth business, as I've demonstrated to you before. Yeah. Also here, the tariffs on the magnets, 7%. So for rare earth raw materials, we see a completely different picture. We can see zero import duty wherever it comes from, whether WTO or non-WTO, it doesn't matter, zero import duty. Of course, the US has special treatment for whatever they could possibly export, except for the bastnäsite from NdPr, which runs under the top line course of rare earth metals. So then, on top of this, there is the China resource tax, which is also often ignored. It has been enforced since September 1 last year, but it had been in the pipeline for 3 years before. Basically, it is a rate depending on what rare earths we are talking about. Light rare earths have 11.5% with special discounts for Shandong and Sichuan. Medium rare earths 20 and heavy rare earths 20. The law says for light rare earths slightly different, but the implementation instructions were as I put above. So this is ad valorem. So it means you sell 100 tons of concentrate and you get a certain value for that. On that value, on your invoice value, this is the tax that you pay. Now, the beauty is, if you import these raw materials, the resource tax doesn't apply. That explains that Chinese companies are very eager to import because they can save this. So coming back on the US and no manufacturer of NdFeB and still in SMCO, there are some, but they're struggling. All prices in China contain value-added tax. The VAT is not shown separately. So what we get as prices from China for rare earth metals or rare earth oxides always contains the VAT. The VAT is 13%. VAT, for those who are not familiar with it, these are a consumption tax. The end consumer pays for it. Within the value chain, if you pay VAT to your supplier and you receive VAT from your customer, only the difference between the two is due to the tax office, which means the tax in the value chain is cost neutral. So, but if you export rare earths from China, if you're a foreign customer for rare earths from China, and you buy NdPr, or you buy dysprosium, or you buy lanthanum, you pay 13% more than a domestic user would pay because you can offset the VAT and you can't. There is a full VAT refund for permanent magnets from China, which means if you're a domestic buyer or you're a foreign buyer, you both have the same price. So what this system means in effect is that a Chinese NdFeB producer has a 13% lower raw material cost than a foreign NdFeB maker would have. And that is where my question to Lloyd came from, because this is an important difference, because we have seen the margins are not that exciting. So I paraphrased this a little bit to make it a little bit clearer. There is no offense intended, but for rare earth raw materials, China tells it, we want it from you. We want to preserve our resources. We will buy your material. It's duty-free and there's no resource tax on these imports. So this is very attractive for our rare earth companies. Finished rare earth products we will give you with a fair amount of exhaustion and dread if you agree to have higher costs than our own users, which is the VAT, 13%. They will keep this. On the magnet side, however, you can have as much as you want, and you can have it at competitive prices. We fully refund the VAT upon export. We will not give you easy market access to sell your rare earths in our country that you may not be able to sell anywhere else anyway, because you have no market. Yeah? There is an import duty for rare earth oxides, whereas the raw material is duty-free. So don't give us the rare earth oxide, give us the raw materials, what they're saying. So I give you some concrete example. Yeah, let us say when buying from China. The market price from China as published, let it be $100, as Morgan Stanley used that. Yeah, that includes 13% VAT. The domestic buyer, he can offset the VAT, and the cost to him is $88.50. But when this product is exported, a foreign buyer will pay the full $100 a kilo, plus shipping, handling, insurance, and of course the import duty in the US or wherever you may be sitting. Yeah. As opposed to an NdFeB magnet type XYZ, let us say $50 per kilo, including 13% VAT, the net cost to the China domestic buyer would be $44.25. And since there is a full VAT refund upon export for magnets, the cost to the foreign buyer is exactly the same. And that is very competitive. Yeah? Plus, of course, you have your shipping and handling. So, and then that is the question that I asked Lloyd. If a junior rare earth miner in Australia starts production of NdPr, what price will he offer? $100 or $88.50? The answer is obvious. He must go for the best price, because otherwise the next shareholder meeting will not be a pleasant one. Yeah? Therefore, cost-wise, towards an NdFeB maker outside China, it does not matter if he buys from China or from a non-Chinese source that will quote in the Chinese price. Then sell to China. Say NdPr market price is 100, as we suggested before. So in, say, offering absolutely no advantage to buy the import product, we simply just match the China price to our sales price. That would be including import duty and VAT. So our price here at China would need to be $84.28. In case of US, because of trade war duties, that would be $66.10. Something that Morgan Stanley suggested is good business. Rare earth concentrate, on the other hand, the price is determined according to a price formula where every element contained in the concentrate, perhaps without lanthanum and cerium, is being valued. Typically, it is the Shanghai low daily quote minus a conversion fee. So here you would not have only the NdPr as the value carrying element and 70% or 68% of lanthanum and cerium that you would have to dump somewhere against Chinese products. Yeah, you would have everything paid for and it would be off your yard. So the question here is, would you rather invest $1 billion in an ore to oxide operation and engage in pesky competition in and with China, or would you invest $300 million and ship raw material to China where you get your rare earth contents fully valued? So if we go back to Morgan Stanley's investment case, if NdPr was MP Materials' key product, as Morgan Stanley wrongly assumed, MP would be in deep trouble. In the current market and tariff situation, shipping rare earth raw material to China must be the default mode of operation for any junior rare earth miner. Low investment, value maximization on every REO contained without having to do the pesky capital intensive downstream work. And that is how MP make good money. If you want to destroy MP, make them go downstream. So our investment case would be either it is a rare earth miner exporting raw material to China, or a small rare earth company with a small output that can be easily placed in the home market. If we want to change something fundamentally, it has to happen on a political level. Yeah, of course, weaponry is controversial. We cannot expect anyone outside our own country to supply us the material with which we make weapons that could destroy them. So obviously, that is something that has to be mended, and the US has done it. The small facility of liners for the 5,000 tons material in Texas, plus probably the heavy rare earth one following as soon as liners can prove that they can do it. That problem is solved. But then we should not say, like Ted Cruz suggested, throw hundreds of millions out of the window for subsidies and incentives, debating clubs, and stillborn projects in rare earths that will be entirely dependent on subsidies. Actually, policymakers must engage China in trade negotiations. This is something I already told the EU Commission 8 years ago, and they wouldn't pick up on it. The objective must be that China, like any other country that has VAT, industrialized country that has VAT, China must apply the same VAT refund rate upon export to all its export products. It doesn't matter what rate that is, but it must be the same for all. Only with this you will have an environment where competition with China can prevail. Without attacking this issue, the politicians need to do nothing at all, because the problem will not change. It will not go away. Now, of course, a lot of people may say that it doesn't make a big difference. It does. In raw materials, it does. In raw materials, it is the world. 2 or 3%, no problem. 13%, big problem. So in case politicians try to be controversial and confrontational with China, I have to quote James Kennedy: "You're literally taking on a government that is on a mission. They're going to own it, control it, or squash it." Or the old steel captain Eckhard Schulz, he said, "You can't seriously expect our industry to compete against China's Ministry of Finance." I would fully subscribe to that in terms of rare earth industry as well. Okay, so after the hard stuff, here's some trivia. Some people in their presentations, they show off automotive, growth, rare earth, and everything, and they put all these little arrows to all these parts of the cars where rare earths are inside. But they don't know the one rare earth thing that keeps all vehicles going. Okay, thank you very much. That is what I had to say.
Wow, thanks, Thomas. Great, extensive, informative presentation. And I'm sure there will be many questions, but we are a bit late, but we can accommodate a few questions. So the floor is open for questions. Thomas, okay, one question. What, in your view, explained the US-EU unwillingness to negotiate the VAT with China? Is actually a person you quoted in your presentation. She's here, Julie Klinger from the University of, in US.
Okay, this is a really big thing. It is enormous. It's not only in rare earths that China dominates raw materials and non-ferrous metals. It is almost across the board. I only know 5 non-ferrous metals where China wouldn't be a dominant supplier, but dominant customer. The trouble here is if in one step China would, for example, start full VAT refund upon export, it would ruin world markets. You would see a massive collapse of markets, and that includes rare earth. If China tomorrow says, okay, Krummer is right, we give full VAT refund on rare earth oxides, the drop would be more than 13%. and that is a problem. So the first step would be China acknowledging that this is a problem. And I had a private conversation with trade officials in Beijing. They are aware that they created a monster. The trouble is that the monster is also being used as such, for example, in cases where China wants to increase or reduce the export quantities. We've seen that, for example, in steel several times. So the issue is, it is a really big one. It is really, really big and can have substantial impact on foreign markets.
Yeah, thank you, Thomas. And what is the typical margin between oxide and metal production? You have any?
Very roughly, say, since we are at NdPr, a little bit above $20.
Okay, thank you. And how reliable are the data, production and export, which are provided by China? It's actually a question from a very important downstream player. Yeah.
Yeah. Okay. I know what he's getting at. I have taken the data from the China Rare Earth Industry Association, and I tried to vet them against the data that I collected one by one by hand from the Chinese trade statistics. And I note that there is a discrepancy, and I think that is what you are going at. I see the same thing. My explanation may be that the China Rare Earth Industry Association also includes the rare earth contents of alloys that they export. For example, in ferroalloys that have like 10% of whatever lanthanum or, you know. So, but I understand where you're coming from. I have the same problem.
Okay, thank you. And you said that most of the magnet suppliers, no, the questioner is asking is 100% on their capacity, but you say it is about 67%. Why are you saying it is 67%?
Oh, it's quite simple. This is capacity and output. These two numbers, you know, if you have a 300,000 ton capacity and 200,000 ton output, it's self-evident. Yeah.
Okay. Thank you so much. We are a bit on late, and I don't see any more questions in the panel. And they can also, if we have enough time, but they can also contact either you directly or through me if they have any, you know, further questions or specific requirement on the value chain information. Thank you so much.
Okay.
And thank you. Yeah. So I welcome the next speaker is David Merriman, and he is from Roskill. We all know him. A good market. You know, Roskill is the good market report provider on rare earth as well as on other critical raw materials and base metals.
Thank you ever so much for allowing us to speak today, and welcome everybody who's attending today. The aim of this presentation is firstly to provide a quick overview of Roskill's analysis into the rare earth industry and market, and then look a little closer at some of the major challenges which the rare earth industry is currently facing and is expected to face over the coming years. There might be quite a few points that have already been covered by Lloyd and Thomas already, but hopefully we can provide some new perspective. I'll be talking about some of Roskill's forecasts, so just a quick disclaimer here regarding forward-looking statements. So some of you may have seen this diagram before, and I note that there are some rare earth projects missing from the diagram, so I apologize if anyone's favorite rare earth project isn't included here. The chart shows the distribution of rare earth projects in operation and under development outside of the Chinese market during 2020. And it indicates that the occurrence of rare earth projects globally is not necessarily geographically sparse, though Europe and South America do look to have got the rough end of the deal so far. What the slide does show quite clearly by the pie charts on the left, however, is that Chinese production continues to dominate both refined and mined production of rare earths products globally, though this scenario is changing. When we look at the rare earth mined production, China has become a major importer of rare earth ores and concentrates, particularly in the form of bastnasite mineral concentrates from the US and ion absorption clay-derived products moving across the border with Myanmar, supporting growth in the production from both of these sources. We've also seen in Chinese imports or growth in Chinese imports of monazite mineral feedstocks from producers in Australia, in Madagascar and other countries, which are increasingly being processed to refined rare earth products by companies such as Arafura Resources and their subsidiaries within the Chinese market. Now, the increase in monazite-derived rare earth compounds and products in recent years has seen an increase in the proportion of neodymium and praseodymium compounds produced, with monazite generally containing a higher NdPr and heavy rare earth content than typical bastnasite concentrates, which have dominated the industry throughout the majority of the 2000s. In 2020, however, the increase in NdPr and heavy rare earth production caused by this is marginal at best, though with most projects now targeting maximizing their NdPr output, the proportion of NdPr in the total rare earth production suite is expected to continue to pick up. So overall, in 2020, rare earth mine production was reported to total around 214,000 tons of rare earth oxide, continuing to increase year on year with continued increase in output at projects such as Mountain Pass and the supply of mineral concentrates from heavy mineral sand operations in multiple countries. In 2021, Roskill expects mine production to increase further, driven by increased prices and a lack of COVID-19 related disruption at the start of the year, hopefully, reaching around 221,000 tons of REO, whilst refined production is expected to reach roughly 160,000 tons after recovering from disruption in 2020. Now, on the demand side, it's clear to all that the demand for rare earths is showing great growth potential after what was a difficult year for certain sectors of the industry. Whilst all the talk has been surrounding the use of rare earth products in rare earth permanent magnets and their use in automotive and wind turbine applications, which I'll talk in greater detail on later, the use of elements such as lanthanum, cerium and yttrium in catalysts, polishing powders and ceramics experienced a fallback in demand in 2020 as a result of the disruptions caused by COVID-19 and the ensuing periods of lockdown. Now, FCC catalysts saw a nearly 8% decrease in demand year on year, supported by a recovery in demand, particularly towards the end of 2020. Elsewhere, sales and productions of ICE vehicles being strongly impacted by the COVID-19 pandemic saw demand from auto catalysts experience a sharp fall of around 20% in 2020. And as a result, lanthanum and cerium consumption fell by roughly 4.5% year on year. And that was largely supported by some more robust demand for the use in polishing powders in particular. For other elements, for europium demand, we continue to see poor performance in 2020, though this trend has been ongoing for several years with the reduced use of europium-bearing phosphors. Yttrium demand also showed a fallback in demand as the ceramics industry was impacted with a near 30% fall in yttrium consumption. For rare earths total demand altogether, the culmination of all these factors saw a year-on-year fall of around 5% in terms of total volume in 2020, and that was its first year-on-year reduction since 2012. The big growth area, however, remains rare earth permanent magnets, and principally NdFeB magnets, and their use in high-growth industries such as EVs and wind turbines. And the industry continues to be reshaped away from a focus on lanthanum and cerium applications, which formed the majority of revenue for rare earth operations up until the last decade, and towards the production of these, production and demand of these rare earth magnet raw materials and products. Now, this is expected to see a clear impact on the supply of rare earths over the coming 10 years. So Roskill's forward-looking assessment of supply sees total refined rare earth supply reaching around 216,000 tonnes of rare earth oxide in 2030, and that's representing a compound aggregate growth rate of around 4% per year from 2020 over the decade. This, however, is considering all the rare earth products together, and as I talked about earlier, there is a focus on production of NdPr and Dy for magnet applications in particular. Now, the chart on the right here shows how this focus on magnet products is expected to cause an accelerated increase in supply of these elements when compared to others, though the natural linkages between rare earths will continue to see close associations between light rare earths, for example. One area which is expected to disrupt this trend, however, is the increase in secondary production of rare earths from recycled magnet material, which is able to provide Nd, Pr, and Dy production in particular without the co-production of significant quantities of lanthanum and cerium. There are many challenges which need to be overcome for secondary supply of magnet material, despite several companies developing capacity in North America and the EU, including the collection of end-of-life material and the dismantling of magnets in particular. There is continued research and development ongoing at places like the University of Birmingham and other universities looking at solving these issues, though as things stand, there are still several issues encountered with adhesives and resins used to secure magnets in certain equipment. The recycling of different raw material sources, however, such as wind turbines, may present some opportunities to get around some of these issues, which are particularly apparent when collecting and processing large numbers of smaller magnets, though the lead time for significant volumes of wind turbines to be reaching their end of life is expected to be a limiting factor on volumes available for recycling. So for future demand growth for rare earths, it's expected to be quite significant and is the first real challenge for the industry, which I'd like to really identify within this presentation. Now, it might be quite an obvious issue, but it is essentially the source of all of the other main issues which the market is experiencing over the coming decade. Now, total rare earth demand from all applications is forecast to approach 190,000 tonnes of rare earth oxide by 2030, representing a CAGR of nearly 4% per year. Now, this might not be that much of an earth-shattering number when looked at first, though when we consider the proportion that magnet applications account towards this and the raw material requirements which will be needed, it forms a different story. So the demand outlook for rare earths is positive in all end-use markets, though the magnet industry is expected to experience the strongest growth out of all of them and increase its market share to roughly 36% of total rare earths demand by 2030, compared with around 29% in 2020. Now, magnet applications are expected to see demand growth of around 75% over the coming decade, which is expected to place significant strain on the market and require several new producers to enter production, along with expansions at existing producers to meet this demand growth. Now, the magnet elements are also expected to increase their proportion of economic support for rare earth projects, with the value of the magnet portion of the industry expected to increase its share by almost threefold by 2030. So where is this magnet demand originating from? Well, as previously mentioned, rare earth magnet demand is being driven by their use in wind turbines and electric vehicle drivetrain applications, along with some other high growth markets such as air conditioning, as Thomas mentioned, both of which have all of these have quite different operating environments which the magnets need to perform within. So, for example, drivetrain technologies are required not only to provide strong magnetic strength in a confined space, but also be able to withstand elevated temperatures for prolonged periods without suffering demagnetization. Now, for this to occur, heavy rare earths such as dysprosium and terbium are required to increase coercivity, though some grain boundary diffusion methods can be used to mitigate the increase in Dy and Tb requirements if cost savings are beneficial. Demand from drivetrain applications is forecast to increase at a breathtaking rate over the coming decade, as standard passenger EV models on average consume around 2 kilograms of NdFeB magnets, containing roughly around 880 grams of rare earth oxide within that. Now, production of battery electric vehicles is expected to exceed 15.1 million units by 2030. Now, that's increasing from 2.3 million units in 2020, and this represents a growth rate of roughly 20.5% per year over the 2020s. As a result, magnet demand from drivetrain applications alone is forecast to exceed 63,500 tons of NdFeB by 2030, and that's requiring magnets with good coercivity and good magnetic strength. Conversely, NdFeB magnets used in wind turbines do not have such significant coercivity requirements, being more in line with magnet coercivity requirements for household appliances, as most wind turbine models have effective temperature control systems and ventilation built in. Whilst performance is important in wind turbines, the lower limitations on space constraints mean that lower strength and lower cost magnet grades can be used. With wind turbines consuming in excess of 1 ton of NdFeB magnets in some of the larger offshore models, the magnet cost is a much more sensitive factor, and other factors may be used to reduce costs, such as magnets using rare earth fillers such as gadolinium, or in some extremes cerium. Those cerium usage is much more prevalent in miscellaneous applications such as magnetic clasps and catches. Now, as a result, magnets in wind turbines consume limited heavy rare earths, though demand from wind turbines is forecast to exceed 18,500 tons of NdFeB magnets by 2030, increasing at around 5.5% per year in the period to 2030. Now, when compared side by side, we can see the dominant position which drivetrain technologies are expected to take in the demand profile for rare earth permanent magnets, with wind turbines and air conditioning units classified under household electronics here also expected to exhibit significant growth. Now, overall, if we look at the distribution of rare earths consumed in magnets used in these technologies, we can see the much greater proportion of heavy rare earths used in drivetrain applications, which, when combined with the strong growth in demand volumes expected, we'll see demand focus clearly on Nd, Pr, and dysprosium, with little substitution by other rare earth elements. Now, this creates some fundamental issues for rare earth demand in terms of supply-demand balance, with the market expected to enter periods of supply deficit for neodymium and dysprosium over the period to 2030. Now, it is expected that the balance for Nd will become the main control on the production of light rare earth products, whilst dysprosium will become the main control on production of heavy rare earth materials. The limited availability of heavy rare earth supply globally is also expected to see tight supply for a number of heavy rare earth elements in the years to 2030, particularly if there are continued periods of disruption to feedstock sources in southern China. A second major hurdle for rare earth companies and the industry as a whole is integration of supply chains. We are all very aware of the integration within the rare earth industry, particularly within China, and the consolidation of the industry which has occurred over the last decade. Now, China Northern Rare Earths is probably the most fully integrated company within the rare earths industry, with subsidiaries stretching from the production and processing of mined ores through rare earth separation and metal production into magnet production and beyond to the production of finished high-tech products such as MRI scanners. So China Northern is also looking to strengthen its position in the industry through expanding its NdFeB magnet manufacturing capacity to 100,000 tons of NdFeB by 2025, which at capacity would require roughly 40,000 tons of rare earth oxide of those magnet rare earth oxides. So that's Nd, Pr, Dy with some gadolinium and cerium thrown in. Now, this roughly equates to China Northern's current refined production of NdPr, Dy, and gadolinium, suggesting that China Northern will begin to cut off its supply of rare earth compounds or magnetic rare earth compounds to third parties by the mid-2030s as it looks to keep that supply integrated. In similar downstream integrations, both Guangdong Rare Earth Group and Xiamen Tungsten have announced plans to construct NdFeB magnet manufacturing capacity in China, with Guangdong announcing an 8,000-ton NdFeB facility by 2024, and Xiamen Tungsten releasing a statement last week that its subsidiary Fujian Qiangting Jinlong Rare Earths will look to construct a 4,000-ton NdFeB magnet facility by late 2022. Now, combined, these two proposed facilities will require roughly 4,000 tons of those magnet rare earth oxides, again reducing the material made available to third-party processors and for international trade. The downstream transition to NdFeB magnets production and beyond continues to close the door for rare earth companies, for non-Chinese companies seeking access to rare earth products, not only by reducing material availability to the general market, but also by making it more difficult on a price basis to compete with fully integrated producers. So major rare earth producers outside of China are by comparison nowhere near as integrated, mainly because of the cost of constructing that downstream capacity and the expertise to operate these facilities. Now, companies typically occupy 1 to 3 stages of the rather rudimentary supply chain that I've put up here before releasing that product to market, instead of one company being integrated from cradle to finished product. The reaction in the EU and in the USA has been for multiple companies to combine their expertise to form contract-bound integrated supply chains, each targeting their specific area of expertise. So the formation of these supply chains provides access to the downstream markets without having to provide material to China, though it is difficult for these companies to be competitive with intra-company integration because of the sales margins which need to be incurred at each stage of the supply chain. Now, multi-company supply chains are also difficult to manage, as production scale is often limited by feedstock availability from upstream participants or demand from downstream participants which might not be in a position to increase capacity in line with your production expectations. As a result, the production scale of a multi-company supply chain and the reaction to market growth may be restricted, particularly in a market where there are few alternative suppliers, where there are limited end-use consumers, or products are largely bespoke to individual facilities. Now, to combat this, the rare earth industry outside of China needs more supply options, though it is difficult for companies to finance and develop supply without signing pre-production supply contracts with downstream partners. And there may need to be companies which take a leap of faith, hoping for a growing market to catch them before they run out of cash flow. Now, a third challenge for rare earth companies is access to finance, and this is something that Lloyd had touched on before, and raising that capital to fund project development through to commercial production. The cost of project development at many projects, particularly those looking to take production through to separated rare earth products or beyond, can be significant, often running into several hundred millions of US dollars. Now, with low rare earth prices in recent periods, I know that they've gone up recently, and share prices for rare earth developers until recently being relatively low, required capital has often been well in excess of company market capital, making it difficult to accrue these levels of finance. In the past, rare earth industry participants have struggled with attracting investment, as investment risk was deemed too high for all but some of the more specialist, critical and technology resource investors. Now, rare earth companies were also competing with lithium, cobalt, nickel projects looking to raise finance based on the same EV growth story, with the battery narrative often showing more robust growth potential and less risk factors such as Chinese dominance, substitution risk, and lower capital requirements for projects. Now, this has more recently changed with the advent of green investment funds and the shift towards sustainable investments. And the attachment to the growth story of EVs has also played a major factor in increasing interest for investors in rare earths who might have missed out on the battery story and now don't want to miss out on the next boat. Now, despite the interest in EVs, in green technologies, in higher rare earth prices currently, there remains some reluctance to investment in the rare earth industry, which is often posed by one question: what happens if China increases production significantly and floods the market? Now, the Chinese dominance remains a Damocles sword hanging over the industry for some investors, though thankfully better knowledge of the industry and the constraints on China's willingness to turn back on the taps is permeating through to investors. Now, whilst China is unlikely to allow its market controls simply to slip away, if China wants to increase the amount of value-added products being sold into the EU or USA, it will be unable to turn back to the dirty and outdated mining and processing facilities, which have largely been mothballed in the Chinese market since 2015. That is without significant investment in updating these facilities and finding more sustainable, finding new and more sustainable feedstock sources. The surge for development of regional supply chains is also removing a bit of a focus on China as a competing market as companies look to target creation of more separate regional markets in the EU or USA. Though these markets and the end-use markets within the EU and USA still require significant development and scaling up to support significant rare earth production beyond, say, catalyst applications. Now, finally, a key challenge which the rare earth industry is facing currently and is expected to continue to face is increasing scrutiny of ESG factors in supply chains, particularly within the EU and US markets. With OEMs and even investors being charged with greater responsibility regarding the sourcing of their raw materials and which companies they do business with, the rare earth industry could pose some interesting challenges, particularly when it comes to traceability of material and how energy intensity and environmental impacts of raw material sourcing are monitored. In the battery space, we are already seeing the need for OEMs to provide provenance, product content, and most critically CO2 intensity information for products used in automotive applications. These are within those battery passports that are being looked at. And this kind of legislation could very easily spread to the motor and other rare earth permanent magnet bearing components within automotive products and also into other major end-use markets for rare earths, such as renewable energy generation. Now, with China looking to market finished permanent magnets and potentially permanent magnet motors into the EU, the proposed EU carbon border tax may see rare earth producers in China need to take steps to reduce CO2 emissions and avoid additional costs further down the supply chain. Now, if the carbon border tax is introduced, it is applied to rare earth products, both of which are ifs currently. It is unclear how these additional costs will be dealt with, whether these costs will initially be passed on to the consumer, as there are currently limited alternatives for rare earth products, will remain to be seen. Though it does provide an opportunity for lower CO2 or energy intensity of use operations to find some market share by undercutting these additional costs of legislation, such as the carbon tax. If costs are passed on to the downstream, we will likely see greater disparity between the Chinese domestic price and that of the FOB export price until lower CO2 cost alternatives are developed and market competition reduces any disparity there. Now, in addition, to these environmental factors, it's unclear how these social and governance factors will play out for the rare earths mining, processing, and downstream production in some regions. Again, taking a lead from the lithium and battery industry, OEMs and now lithium producers are looking to align themselves with international responsible mining initiatives, with companies such as BMW and Daimler stating they will only source battery materials from mining sites compliant with Initiative for Responsible Mining Assurance, or IRMA or IRMA certification. Now, if similar programs were rolled out for rare earth mining projects, it may significantly limit operations which can provide material to major manufacturers in the EU or the USA, and could provide a particular issue for heavy rare earth ores and concentrates, particularly extracted in southern China and Myanmar, as a result of not only environmental concerns in their extraction and processing, but also social and governance issues, which I'm sure many of you are aware of currently. So I'll end there. I'm happy to take any questions. Back over to you, Nabil.
Yeah, thank you, David. A very excellent, nice presentation. We actually a bit late. I will have a couple of questions. I already received a couple of them in the panel. Currently the heavy rare earth price are being a bit higher, and same way a couple of OEMs looking for alternative, including BMW you mentioned, and if the price goes up, and it's actually the normal question that if the OEMs diversify or use alternate technology, currently will there be any impact on the heavy rare earth price?
I see. Well, as I mentioned in the presentation, there's quite a supply side squeeze on heavy rare earths in particular. But obviously, if there was demand disruption on the demand side, particularly their use in automotive applications, if an increasing number of major OEMs look to diversify away from rare earth permanent magnet technologies or reducing and thrifting their use, then that would likely have an impact on some of our longer term forecasts, especially for heavy rare earths in particular. I think our forecasts for heavy rare earth prices are still pretty robust because of that limitations on the actual supply availability of heavy rare earths and where that material is going to come from. So I think even if there is a thrifting away of heavy rare earth usage, either by cutting out permanent magnet technologies completely, or by using, say, grain boundary diffusion or other techniques to reduce that, there would still be some quite strong support for heavy rare earth prices.
Yeah, thank you. Thomas, do you have a questions?
Yeah, I wanted to ask in a similar direction. I mean, obviously the shortages that you forecast will have an impact on costs and prices. And there the question would be, is there really tolerance in the vehicle industry for increased material costs? Because as far as I understand, the profitability of EV is not yet exciting. A lot of them depend on subsidies. So what role does replacement play in your forecast?
Currently, I mean, we are seeing quite a range of technologies being used in EVs, and I think that when you're looking at the use of the varying technologies, permanent magnet is definitely the major factor within that, and we expect that to really be the case continuing on kind of throughout our forecast period. Now, there's a couple of reasons for that, and you mentioned the kind of, I suppose, the slim margins within the automotive industry, and potentially, and for EVs currently, is many of them relying on subsidies to support that. if you look at the overall kind of cost breakdown about where the where the cost of production is within EVs, a lot of it is within those battery materials and the battery technologies used. And actually using permanent magnet motors and the cost saving that you can achieve on your battery raw materials within that, and the size of battery and the issues that that solves, is a bit of a kind of a balancing act between the two. Obviously, there is price sensitivity for using rare earth technologies, but that has to be kind of carefully balanced with those battery costs, and also carefully balanced with the supply availability of these materials as well. And that's really the main factor that we've seen many of kind of the OEMs that have shifted away from using permanent magnet technologies. That's their main issue with using them, is that supply availability rather than a cost basis.
Yeah, thank you. Thank you for nice answer, David. And we actually we have one more presentation from the US side. So if you have any further questions, sorry I cannot ask all of your questions, but you can direct me through email or connect David directly. So I go for the next presentation by Roderick Eggert. He is the professor at the Colorado School of Mines and also the deputy director of the Department of Energy Critical Material Institute. Welcome, Rod. I will make you a presenter now. Just give me a second. Yep.
Thank you very much to the organizers for inviting me. I'd like to provide a somewhat broader perspective on rare earths, and a broader and a US perspective, and more specifically focus on the question of what might we expect from US public policy under the new Biden administration. Let me begin by saying that these are personal views, and I think it's important for me to say that because I am affiliated with the US Department of Energy's Critical Materials Institute, but I'm not a federal employee, and these comments are not an official statement of the US government. My comments are broader than rare earths, and they focus on US public policy toward critical minerals and materials generally, because it's this broader policy environment that will determine what the US government does in the realm of rare earths. I have a couple of key takeaway messages, and let me start with that, both because of time and because I don't want to bury the headline in the details of my presentation. The first key takeaway is that I think critical minerals and materials will be a continuing priority, despite the dramatic, I would say, change in tone between the Biden administration and the Trump administration. But there actually will be less change than one might expect, given the change in administration. To a large degree, a number of policy directions have been gaining momentum over the last 10 or 15 years, and I think to a large degree, these will continue. And by that I mean there'll be a continued focus on technological solutions to problems associated with supply chain risks. There'll be a continued focus on education and workforce development, and more generally, a continued focus on primarily relying on the market. Now, having said that, it will not just be kind of a caricature of rely on the market, government hands off, because even in this philosophical approach, there is an important role for government in intervening where markets are not working well, and an important way in which markets, in the case of rare earths, are not working as they might and arguably should, is in the area of international trade. I don't think we'll see the Biden administration imposing trade restrictions as part of a policy toward critical rare earths, but I think we will see, and getting to really commenting on Thomas's intervention earlier today, I think we will see, or we're likely to see the Biden administration engage in negotiations with China to create freer rather than more restricted or distorted international trade. All right, Nabil, if you could move off my title slide to my second slide. I would say in my third bullet point there, it begins with the word but, and but probably should be all capitalized and in bold. There is, I think, a growing acceptance or recognition that what some call industrial policy has to play a bigger role in US policy than what has largely been a rely on market solutions approach over the last decade or so. Next slide, please. I've organized my slides around three questions. First, what has happened since January 20th, the Biden inauguration day? Two, how can we place these developments in a broader context? And third, what might we expect from the new administration? Next slide, please. Well, since Inauguration Day, just this week, the new Secretary of Energy, Jennifer Granholm, has publicly stated that, and there's a headline in my slide, I actually can't see the slides anymore, but that the US needs to produce more EV minerals. Now, I think she was referring primarily to battery materials, but clearly rare earths are part of this. I would say more broadly and more significantly, next slide, please. There's the Biden administration executive order from a couple of weeks ago on America's supply chains. The outcome of this executive order will really frame and define more specifically what the federal approach philosophically and in terms of detail will involve. The executive order, on the one hand, you might say is disappointing in that it only requires reviews, but it's the normal sort of review that takes place early in any administration. Most importantly, for the rare earth sector, within 100 days, various federal agencies are required to review and make policy recommendations on 4 specific supply chains: semiconductors, high-capacity batteries, critical minerals, and other identified strategic minerals, and it explicitly calls out rare earths and pharmaceuticals. So I would say one philosophical change between the Biden and the Trump administrations is placing critical raw materials and rare earths in the broader context of supply chains generally, and focusing less narrowly on mineral resources, perhaps less narrowly on the upstream part of raw material supply chains, and on supply chains, rather on supply chains more generally. Next slide, please. If one looks at the detailed policy recommendations, the goal, create resilient supply chains, that's fair enough, that's quite reasonable, but by itself doesn't tell us much. The next set of specific policy areas that are to be covered, all but the last one, I would say all are consistent with what you might call the traditional neoliberal rely on the market, except where markets are not working well, approaches. Conduct a review, work with allies, reform trade rules, strengthen education and workforce development, and so on. The last bullet point, however, I think is quite telling in terms of what it might signal, and that is use federal incentives and procurement regulations to pursue these goals. While that has been true over the last decade or so, it has been I would say not a prominent part of federal policy. Okay, so that's what's happened to date in the Biden administration. Let's put that into a broader context, and that's my second point number 2 from the previous slide. Think about the broader historical context. Let's start with the geographic context. Everything that we're talking about today has a geographic context. There's been a significant fragmentation geographically of supply chains since World War II. You used to have material and product supply chains organized stages close to one another. Raw materials produced close to manufacturing, close to customers. For a variety of reasons, that's changed, partly because of the deliberate focus of international trade negotiations to open up international trade, reduce formal trade barriers, but also due to dramatic reductions in costs of ocean long distance bulk transport, and also dramatic improvements in information and communications technologies that allow coordination of activities that are geographically dispersed. Second, broader context. Next slide, please. The technical context. Materials have become more complicated. Some have used the quote, the periodic table is under siege. The early cell phones used 20 or 30 elements from the periodic table of elements. Modern smartphones use almost the entire periodic table, at least in terms of those elements that we can imagine using in modern engineered products. Next slide, please. So the key point here is that geographic fragmentation and technical complexity beget vulnerability, one important example of which is rare earths. Next slide, please. What about the policy context? And here my image for today, and at least in the US context and discussion of public policy, think of a pendulum, and the pendulum is swinging toward industrial policy. And it's part of the broader philosophical really thinking and evolution of thinking about whose responsibility should it be to provide supply chain insurance. What are the relative roles of private actors as opposed to governments? And I like this image of a pendulum swinging back and forth, and Bob is the name of the ball that swings back and forth, not my name or your name or any individual's name. Click, please. Next slide. And if we think about the extremes of the pendulum, we have what some people call neoliberalism, and at the other extreme, industrial policy. And by neoliberalism, I'm referring to this general starting point or bias in policy deliberations of rely on market solutions, except in specific, well-defined situations that markets do not work well. So when the issue is distortions to international trade, focus on opening up international trade. If the issue is that there are environmental externalities that are distorting markets from what is optimal or socially desirable, intervene for environmental protection. If the problem is under provision of what economists call public goods, basic scientific research and development, education, things where the benefits to society, the sum of the individual benefits to individual actors is less than the collective benefit to society as a whole. It's worth more collectively than the sum of the individual parts. So that this neoliberal philosophy has guided and framed US policy I would say much more than even in the other market economies of Japan and Western Europe, for example, over the last several decades. And at the other extreme, we have industrial policy, which says government has an important role to play in actively intervening and prioritizing specific markets, and through a variety of mechanisms that could be trade policy, subsidies, state ownership, provide really extra pushes and priorities to specific industrial sectors. And that has, to a larger degree, been true over the last several decades in Japan and Europe and Korea, and certainly China, than in the United States. Now, I would argue this is a caricature and a false dichotomy, because in fact the US government and all governments do not just leave everything to the market. The US Department of Energy loaned money to Tesla a decade or so ago that had a quite important and fragile time in their development. There are many other examples as well. But nevertheless, neoliberalism, or emphasize market solutions as opposed to targeting specific sectors and more muscular government intervention, I would say are useful in thinking about different approaches to public policy. Next slide, please. So if we look at the early years of the Trump administration, and yes, go ahead and complete the slide. In some respects, not in all respects, but in some respects in the early years, we saw really neoliberal tendencies or approaches, not with trade policy, clearly, the belligerence and confrontational nature of the trade negotiations. But if we look at what happened as a result of the 2017 Trump executive order, we have a list of critical minerals, and we have a federal strategy. And if I could have the next slide, because I think it lists the federal strategy, and which is quite reflective of this: rely on the market except when the market is not working well. So a priority on advancing research and development. So a classic public good. Provide for national defense. Clearly a public good, well accepted role for government. Enhance international trade and cooperation. Improve through geological surveys the understanding of domestic mineral potential. Make more efficient federal permitting processes to allow more domestic mineral development, and education and workforce development. These are all, as I said, kind of classic neoliberal, rely on market solutions approaches to public policy. Next slide, please. Whereas a year ago, and really starting at the end of last year, we saw, I would say, credible or direct evidence of the pendulum swinging towards public policy. Next slide, please. The Trump administration executive order of September 30th, which declared reliance on foreign adversaries for critical minerals to be a threat to national security. It defined national security more broadly than simply military needs, but included any sort of economic security as part of national defense. So a broadening of the definition of national security, and a number of specific aspects in the order that anticipate more muscular or energetic or more direct intervention, potentially, in raw material supply chains. Separately, an entity called the U.S. Industrial Development Finance Corporation awarded funding to a UK-based company that is investing in developing in a Brazilian nickel and cobalt mine. US government funding analogous to JOGMEC, Japanese funding in overseas projects, is something that really has not happened, has not been a part of the playbook for the US. in the last several decades. Next slide, please. So what might we expect? Next slide. Here are the continuing priorities that I think we will see maintained and perhaps slightly enhanced in the Biden administration. There'll be a continued focus on research and development, technology solutions to raw material problems, education and workforce development, military materials, and something we haven't talked about, but developing unconventional domestic sources. What about the possibility of recovering rare earths from various coal process waste streams? Next slide, please. I would say relatively differences between the Biden and the Trump administration, greater emphasis on the circular economy, recycling, reuse, environmental considerations relative to the more narrow upstream focus of the Trump administration. I expect we'll have greater emphasis on working with international allies and partners, although I think people should notice that even in the Trump administration actions, behind the scenes, quietly, there were quite a few discussions, at least, and interactions with the Australians, the Canadians, and other Europeans and other allies, despite the more America First public persona of the Trump administration. There'll be a greater emphasis, I think, in motivating work on rare earths and critical materials with the energy transition. And there'll be, I would say, fits and starts of experimentation with industrial policy. Federal incentives for reshoring and nearshoring, exactly what they will take, what form they will take, I don't know. More narrowly in the realm of what should the federal approach to innovation be. Historically, there's been a bias, I would say, towards funding curiosity-driven basic research and less of a focus on that intermediate ground between basic discovery and commercialization, the middle ground that sometimes is referred to as the valley of death, where new ideas die. Next slide, please. And so to return to my key takeaways, you can read them just as well as I can say them. A surprising continuation in some areas, but there'll be some movement, I expect, towards some form of industrial policy. Next slide, please. And hence the tagline with a question mark from my title slide, policy and market possibilities under the new presidency, a bit more industrial policy, question mark. And with that, I'm done. Thank you very much.
Thank you, Rod. Very, very nice, excellent presentation on giving an overall view of the US presidential policies, focusing on, especially on rare earth. So any questions?
Yes, hi Nabil. I have a question for Rod.
Yes, please go ahead.
I want to ask that I'm wondering how is the progress of the USA's construction of the whole rare earth supply chain, because I've seen so many newsletters and news about the construction of the rare earth supply chain in the USA, but actually I don't know what exactly going on there and how.
Okay, I'm happy to comment on that. At the mining stage, clearly the only significant producer at the moment is NdPr Materials Mountain Pass mine that is producing concentrate that at present is shipped to China for separation and further processing. I would say notably in the news in the last couple of weeks has been the announcement by Chemours, Energy Fuels, and Neo Performance Materials for the shipment of small amounts of product monozites from heavy mineral titanium sands operations in the southeastern United States to Utah for concentration, which then under agreement will eventually feed into Neo performance material, magnet precursor, and bonded magnets. It's a quite significant development, not simply because of additional U.S. production, because I think it signals the kind of rebirth of monazite as a raw material source for rare earths. And monazite used to be a dominant source of rare earths prior to the development of bastnasite mines. To a large degree, this had been off limits or viewed as off limits because of concerns about the radioactive character of monazites. But under certain circumstances, this suggests that monazite could be examined again on a larger scale, not just in the United States, but elsewhere. Now, in terms of the U.S. supply chain, the U.S. government has or is in the process of executing contracts for small-scale separations facilities for heavy rare earths and light rare earths in the United States, using feedstock from California in the United States and from the Linus Australian and Malaysian operations. There are discussions and talks, but as far as I know, no concrete plans for metal making and alloy making, although there are small capabilities in the United States. Magnet making clearly is a significant gap in the U.S. if one's goal is a U.S. only supply chain. USA Rare Earths, which is developing a rare earth deposit in the state of Texas, has acquired magnet making equipment from Hitachi that was being used but had been mothballed in the United States for neodymium iron boron magnet production. They have the intention of going from mine to magnet, but that is not happening at the moment. The degree to which the federal policy targets an entire supply chain for rare earths in the United States remains to be seen. I think personally more realistic is a supply chain outside of China involving the United States and other countries that are identified euphemistically as allies and partners. So many discussions with Australian and Canadian and European counterparts.
Yep, thank you, Rod,
Yeah.
for a nice answer. Rob, can you give a concluding remarks and vote of thanks to all of our participants and speakers?
Will be my pleasure, Nabil. First of all, Nabil, I would like to thank you and everybody behind the screens that have been working hard to make this all possible. It is not always easy to get everybody in line and get everything organized in time. So thank you very much for that effort. Furthermore, I would like to thank all the speakers of today with their valuable input. And you made REIA really a global association today, because we had speakers as from the down south in Australia up till America and everything in between. So it was really worthwhile of hearing all your contributions. Thank you for that. Thank you very much. And I would like to thank all the participants for their kind patience to listen to all that was brought forward. And I hope that the next webinar or the next meeting of REIA, we can all share that again, and preferably COVID will end soon and we can meet again in person and enjoy our company more directly. And with this, I would like to conclude. Thank you very much again. And Nabil, I would like to ask you to close this meeting.
Thank you, Rob. Thank you, Rob, for nice vote of thanks, and thank you all for your participation. We close here.